I think we're going to have a boom in economic activity. That first one, the manufacturing structures, is just for 3 years. The other ones have been made permanent. And so this takes our effective corporate tax rate in the United States, not statutory, that's still at 21, but the effective tax rate for the next 3 years at least is going to be roughly 10%, one of the lowest in the world. So I think we're in for some very good times. We think we're moving from a rolling recession into a recovery and then into a productivity-driven boom in activity.
Remember, September is the month where we often find lows for Bitcoin dominance. Sometimes we'll find highs, but whatever direction dominance is going into September, and then reverses course out of it. I think dominance has formed a low in the month of September, just like we said it would. I think it's going to head higher here at the very end of September, and I think it should explode higher in the month of October.
The stock market is breaking from tradition. September, usually one of the weakest months for equities, has instead set the stage for a potential 5th consecutive month of gains. This unexpected strength raises a crucial question: is it the calm before a storm or the beginning of a lasting rally? At the center of this optimism is Cathie Wood, founder of ARK Invest, who believes we're on the verge of a historic economic transformation driven not by short-term cycles, but by deep structural shifts in policy and innovation. Wood highlights a wave of deregulation and a recent under-the-radar tax policy change as major catalysts for this trend. One key measure allows companies to fully expense manufacturing structures for the next 3 years, something that has never happened before. Along with permanent deductions for equipment, R&D, and software, Wood calls these policies music to innovation's ears. She believes they could cut the effective U.S. corporate tax rate to around 10%, sparking a powerful wave of investment, moving the economy from a rolling recession to a productivity-driven boom. This surge in productivity, she argues, could become the strongest anti-inflationary force, much like the Reaganomics era, potentially driving inflation below 2% and giving the Federal Reserve room to continue cutting rates. Yet, beneath this optimism lies a note of caution. Despite the rally in stocks, investors are piling into gold at record levels. Wood interprets this as a barbell strategy, using equities for growth while holding gold as a geopolitical hedge. She extends this idea to crypto, calling it a more volatile form of digital gold, and emphasizes the role of stablecoins as a crucial gateway into decentralized finance, a key part of what she sees as the next generation of the internet. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
We think a lot of good things are happening from a policy backdrop and therefore ultimately a macro backdrop. The deregulation that we're seeing is stunning. It started with crypto and AI. We have a crypto and AI czar now. And I think what many people have not paid enough attention to, mostly because tariffs have been getting all the headlines, given how chaotic they seem. But in OB3, so the one big beautiful bill, there was a tax policy measure that we're not sure has been integrated into many forecasts yet. And it has to do with depreciation, moving from depreciation to full expensing of structures. That has never happened before. Manufacturing structures for the next 3 years, in the first year, they go into service, they will be able to expense fully in that year, as well as equipment, domestic R&D, and software. So music to innovation's ears, I would say. I think we're going to have a boom in economic activity. That first one, the manufacturing structures, is just for 3 years. The other ones have been made permanent. And so this takes our effective corporate tax rate in the United States, not statutory, that's still at 21, but the effective tax rate for the next 3 years at least is going to be roughly 10%, one of the lowest in the world. So I think we're in for some very good times. We think we're moving from a rolling recession into a recovery and then into a productivity-driven boom in activity. If you look at our performance in 2017 and 18, so when interest rate fears were rising and then interest rates rose, our portfolio outperformed in both years significantly. And 2018 was a down year. We were up. So I know that COVID, the boom bust around that time period, got a lot of people thinking, okay, inversely correlated to interest rate. Historically, that has not been the case. So just wanted to make that comment. In terms of the Fed, we do think interest rates will continue to come down. But if we're right, in 2026, at some point, it will be clear we're moving into a productivity-driven boom. What does that mean? Productivity is one of the most potent anti-inflationary forces. This is Reaganomics. It's deja vu. And you'll see back then in the 20 years that ended in the tech and telecom bubble, real growth was very strong. And during those moments in time, inflation came down to surprisingly low levels. And we think that's going to be true next year as well. In fact, we would not be surprised to see inflation well below 2% next year.
Why do you think people are buying so much gold? What's your take on that?
Well, I do think there's been a lot of uncertainty, geopolitical uncertainty especially. So it seems as though there is a barbell strategy going on here, which is equities to take advantage of lower interest rates and potentially the economic environment that I just mentioned. And then gold, just as a hedge, it seems to me. And the same has been true of crypto assets. They are much more volatile than gold, but they have also done well over time. So I think this really is a barbell strategy. We're very well exposed to this crypto cycle. We think stablecoins generally, and of course Tether and Circle have 90% of the stablecoin market now. We think that is a very important entree. The holders of stablecoin will have an entree into the DeFi ecosystem, so decentralized financial services that will now take place on public blockchains. So we think that's really the definition of the next generation internet. It's the layer of the internet that was not built early on, because in the late 80s, early 90s, no one expected financial services to take place on the internet. So finally, 30 years later, we're getting the layer of the internet that is going to enable it.
While Cathie Wood focuses on growth and innovation, crypto analyst Benjamin Cowen is taking a more cautious stance. He warns that a major structural shift is unfolding in the digital asset market, one that could see Bitcoin reclaim its dominance. Cowen points to Bitcoin dominance, the metric that tracks Bitcoin's share of the overall crypto market. Currently hovering around 58%, he believes it's gearing up for a significant move higher. Historically, October has been Bitcoin's strongest month, with average gains of about 5%, and Cowen suggests this time the rally could reach 10%. Pushing dominance close to 60% and firmly re-establishing Bitcoin's lead. This, however, doesn't mean altcoins will collapse. Cowen expects them to lag behind rather than crash outright. He reminds investors that near the end of every major bull run, Bitcoin tends to lead first, as seen in 2017 and again in 2020, before altcoins follow with their own surge. For now, though, interest in crypto remains low, which he considers a crucial factor. Without an influx of new capital, altcoins struggle to gain momentum on their own. The pattern, Cowen notes, is already visible. When Bitcoin rises, altcoins move less. When Bitcoin falls, they drop even harder. To him, this behavior signals that Bitcoin is quietly regaining control of the market. Let's take a look at clips from Benjamin Cowen's analysis to explore his insights further.
So right now, Bitcoin dominance is still sitting at around 58%. And one of the things that we mentioned would likely happen in the month of September is that Bitcoin dominance would likely carve out a low, right? And while everyone wants it to just be a simple move down and then right back up, it tends to take the better part of a month. You can see that the same thing happened right here in September of 2020, and the same thing happened over here in September of 2017. I think that the final rotation back into Bitcoin for this market cycle is about to start. I think the low is likely already in, right? So I think there's this is a good candidate low for Bitcoin dominance here at around 57.17%. If you guys remember from a few months ago, one of the things that we talked about was that dominance could easily just go back down and tag this trend line. And it did, right? It tagged the trend line. It even had a wick below it. But ultimately, I think we're going to see dominance head back up. We have to remember that Bitcoin dominance, the best month for Bitcoin dominance on average by far is October. If you look at the ROI from the cycle bottom for Bitcoin, you can see we're getting into the final innings of this bull market. If you look at it from peak to peak, you could also argue that we're also getting into those final innings. And if you measure it from the halving, we are arguably getting into the final innings of the bull market. In that case, what normally happens is the very last move, Bitcoin dominance should surge one more time. Okay? Same thing happened in 2017. Same thing happened in 2020, 2021, where you see Bitcoin dominance drop, right? So you see it dropping, just like we've seen it dropping over here. But then we get that final spike by dominance back up to the upside in Q4 before alts then start to outperform Bitcoin. So I think that Bitcoin dominance is about to shoot up a lot. Now, there's a lot of people that think that alt season is around the corner and they're calling for Bitcoin dominance to crash. But this is not the time for Bitcoin dominance to usually crash. If you go look at monthly returns for Bitcoin dominance, right? It's a little bit hand wavy, but if you go look at monthly returns for Bitcoin dominance, what you'll notice is that October by far is the best month on average. Now, to within one standard deviation, right, there's a wide range. So there's no guarantee that dominance goes up in October, but I think it has to be the most likely outcome. On average, dominance goes up about 4.8%, plus or minus 5.8% to the one standard deviation. So you're looking at dominance potentially going up as, getting a 10% rally from the current levels, and that would be essentially within one standard deviation of what we normally see in the month of October. If you look at this, you go up 10%, that basically puts Bitcoin dominance back near the highs. If it's only a 3 to 4% move from the current levels, then you're basically looking back at the 20-week SMA. But regardless, dominance should absolutely explode higher as we get, I've for a long time, I've said as we get into late September, we're in late September, right? And we're seeing Bitcoin dominance go up. But in October is when it should absolutely explode higher. Remember, September is the month where we often find lows for Bitcoin dominance. Sometimes we'll find highs, but whatever direction dominance is going into September, and then reverses course out of it. So like in 2019, dominance went up into September, and then it started to go down after it. But if dominance is going down into September, then it tends to reverse course out of it, if that makes sense. Even in 2018, you can see that dominance here has found a low in the month of September. If you look at 2022, you'll see a low in the month of September. If you look at 2023, you'll also see a low around that time, and so on and so on and so on. And in 2020, right, a low in September. So I think this is going to play out the exact same way. Okay, dominance should absolutely explode higher in October. Now, in the month of September, Bitcoin dominance has been holding the lows, holding the bull market support band, actually just like it did over here in 2020. Just like it did in 2020. And we still have a couple more days, of September. So I'm not suggesting that, it's going to play out the exact same way, because the rally over there started in the first week of October. So, if there is a little bit more consolidation, I wouldn't get too scared by it. Unless we get weekly closes below the 50-week, which we're not getting right now. And if we do, we'll cross that bridge when we come to it. But that's not what we're looking at right now. We're looking at Bitcoin still holding above its bull market support band. It's possible that you get another wick down. But all in all, I think liquidity will flow back to the king. And again, you have 3 different outcomes, and every single outcome should likely lead to Bitcoin dominance going higher. If Bitcoin does not hold the 20-week SMA as support, and if it wicks down here, we've seen over the last few days, whenever dominance was dropping, we saw Bitcoin dominant, or when Bitcoin was dropping, we saw Bitcoin dominance start to spike. So if it fails to hold, which hopefully it doesn't, dominance should go up. If it continues to ride this level, we should also see dominance go up because we're too close to the bull market support band for altcoins to get too courageous. And if Bitcoin starts to go back up, like after 2020 and like after 2017, checking in with this 21-week EMA and like 2021, then we know dominance should go up as well into the final market cycle top. So it seems like no matter what happens here, Bitcoin dominance should spike, right? It should spike. And I think we will see it heading back up to 60% really, really soon. That's not to say that altcoins have to crash or anything like that. It's just that they're going to lag, right? And even Ethereum, if you go back to 2020, and you guys, I know I've been pretty bullish on Ethereum for the most part. I was just calling for a correction back to the 21-week EMA before we commence with another move to all-time highs. If you look at 2020, you can see that Ethereum really, it held the 21-week EMA, but it did not take out the August high until mid-November, right? Until mid-November, whereas Bitcoin took out the August high in mid-October. So it took a whole extra month. So what I'm saying is that over the next month, you're probably better off with Bitcoin in most cases. Now, I'm not suggesting you need to go sell your Ethereum for Bitcoin or anything like that. I'm not trying to say you need to do that. What I am saying is that it would be prudent to basically assume that liquidity will flow back to Bitcoin in September, or in late September, and really throughout the whole month of October.
Cathie Wood and Benjamin Cowen both see opportunity ahead, but from very different angles. Wood envisions a productivity boom driven by innovation, lower taxes, and smarter policies, fueling broad economic growth. She believes this will lift all risk assets, including crypto, with blockchain and DeFi forming the backbone of the next digital era. Cowen, meanwhile, is more cautious. His analysis shows Bitcoin dominance rising again, a pattern that often slows the rest of the crypto market. While a strong economy could eventually lift all assets, in the near term, Bitcoin may take the lead. Both reflect hope and caution. Wood's optimism centers on innovation outpacing inflation, creating long-term stability. Cowen's warning is that the path won't be smooth. Bitcoin dominance tends to spike during uncertainty, leaving altcoins struggling. Many investors betting on a quick altcoin rally could instead see Bitcoin pulling away. Even falling inflation could dull crypto's appeal as an inflation hedge, adding to the uncertainty. The crypto market is maturing but unpredictable. Heavy inflows into gold and renewed institutional interest in Bitcoin show that investors want safety and growth at once, a tricky balance. As this next phase unfolds, investors must weigh Wood's long-term optimism against Cowen's short-term caution, because the productivity wave may be coming, but not everyone will ride it smoothly.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.